Okay, let's join on board Naveen Kulkarni, the co-head of research at PhillipCapital. He joins us on the sidelines from the Midcap conference, which is currently underway in the city. Naveen, hi, afternoon. Earlier in the morning, we had Vineet as well open the show and talk about how the conference has been, who are the, companies which are participating. Tell me, at almost the fag end of day one, what's been the takeaway from some of these mid-cap companies? And are you seeing a lot of investor interest in some of these mid-cap names that you're featuring, the likes of an Orient Bell, Vito Switchgear, Merck Electronics, PG Electroplast? It's a long list that you featured.
Yeah, good afternoon. So, we are seeing a huge amount of interest in some of the smaller market capitalization companies, and especially companies which have brand or some strength in terms of supply chain. So where probably the revenues are not up to the potential which the company has. So there we are seeing huge amount of interest. So let's look at some of the companies. So for example, a company like Vito Switchgear. So this is a company which is a north-based player and has a decent brand. We are seeing good amount of interest there. Then a company like Chembond. So there again, it is a company which is into a niche chemical product. So we are seeing good amount of interest there. Another company is Vidhi Specialty, so which is into food pigments, which is again a very interesting space where the company is into. The category is seeing good amount of growth. We are seeing a lot of investor interest there. So any company with a brand or with a niche play, we are seeing huge amount of interest from the investors.
I mean, I have a simple follow-up question, and I, quite like the list of stocks which you have identified. Some of them are offbeat, but companies like Noida, Merck and all have got big brands like Onida. But my question to you is that, in this kind of a market where large part of the market has been shaken up, every sliver, every rock has been turned upside down, do you think there is merit in now revisiting or going to stocks which are really below the rung?
See, of course, there is merit, so that has to be backed with some kind of fundamental. So that is why the investors are focusing on plays where, one, of course, companies need to have a decent amount of cash flows or visibility of cash flows going ahead. So that is one area which, of course, investors tend to prefer. But apart from that, there is, let's say, a certain amount of brand or certain content or certain thing which can be monetized. So for example, we have a company like Saregama, so which has a huge content library, and it is doing some bit of things to monetize the content library, getting into new products, online platforms, being more aggressive there. So there is a lot of interest that we are seeing in such spaces where the company is working out certain plans to monetize its potential, monetize its brands or monetize its strengths. So that is where there's some bit of revenue visibility is possible. Investors are willing to look at such spaces because, of course, some of the mid-cap names that which typically we are very much well versed with are quite expensive. So there is a lot of interest in looking at new spaces if there can be a traction which can come up in the forthcoming quarters.
Okay. So I have a follow-up question on Make Electronics. It's a company which once upon a time had a brand called Onida, which was owner's pride and neighbor's envy. Now that
neighbors envy, owner's pride.
Neighbors envy, owner's pride. Yes, the other way around. Sorry, yeah. The other way around. It's such an old ad that even I'm getting, I'm losing the punchline now. So my question to you is that why do you have a name like Make Electronics or Saregama, because these are two companies where disruption is real?
Yeah. So again, what I'm trying to say here is that these companies do recognize that they have brand, which of course there is some bit of customer recognition which is there, and there could be means by which they can monetize these things. So for example, Saregama, going back to the same example, the content library is real. So they have 1,20,000 songs, which is huge. Second thing is that the online OTT platforms are coming up in a major way. So being on that platform, how to monetize that content, whether you have the right metadata or not, those things the company has figured out in the last few years, and that I think is a crucial part, which is probably takes a lot of time to figure these things out, whether content discovery means we are have been achieved or not. Second aspect is other products which the company could come in. So they have launched a product called Carava. So there are these aspects where the company is taking some steps to monetize the library or distribution improvement with regards to MIRC, where they are looking at increasing the touch points and things like that, where now we know that even the rural markets there is aspiration for white goods and things like that. So of course these companies are focused on those aspects. So they are actually trying to milk their brands, trying to use their strengths to generate more revenues from the existing pipeline, right? So which essentially means that the cash flows that these companies will generate are not going to come in at a huge investment, right? So that means a significantly higher return ratios going ahead if these companies are successful, which means huge amount of re-rating which can take place. So that's why there is a lot of interest in such names.
Okay, Naveen, good chatting with you, and we'll speak again once the conference is over and get in your takeaways and what are the mid caps that one should now bet on.